James Stewart from Ausbil, welcome.
Thank you.
Can you provide us, you run quite a unique strategy. Could you provide us a bit of background on the philosophy of the global resources?
Sure. So thanks. So we're a global resources fund, but we take a long-short approach. So basically we specialise in natural resources, but look to make money through the cycle. So both taking a long view in terms of both stocks and or portfolio exposure, or taking a short view when the cycle dictates. Our goal is to try to generate money through the cycle or generate returns through the cycle while buffering losses with our short capability and put option strategy that we use.
What does that universe look like? How many stocks?
So globally, it's about 4,000 stocks. We do narrow that down using our preferences on commodity exposure, both long and short, and then using some filtering techniques to get us down to a manageable list in terms of fundamental analysis.
And just miners, explorers, or value add? So
value added as well. So we classify natural resources and one step removed. So from our perspective, if we're doing the work on the miners, that might translate through to the service companies. If we look at oil and gas, it might translate through to the shippers. So that's kind of the way that we think about the world.
There's very few of your type of strategy in the world. Why do resources warrant a dedicated allocation?
So from my side, historically, there's been a few competitors which are long only. We've seen those succeed and then fail ultimately as the cycle turns. So our approach is to make sure that we can protect capital during the down cycles. So most of my wealth is in this fund. I want to make sure that I can protect that capital during down markets and hopefully capitalise on down markets, which is why we set up this fund the way that we did. So protecting the downside while getting leverage to the upside.
And 2020 would have been an interesting example for a long-only manager with energy, I'm sure, a big part of the benchmark.
Yeah, energy is a significant part of the international benchmark, and that was certainly a volatile period. Again, coming down from our perspective, taking a long-only view on resources is risky. The fact that we can hedge out some of that exposure to us does limit the risk that we take on.
And moving on to those exposures, where do you see the greatest, could be long or short views in terms of sectors, and then onto individual stocks?
So probably our biggest sector exposure at the moment is battery materials. And if I drill down, that would be lithium producers. And if I take that down to the company side, it's probably Galaxy Resources. So if we look at the last few years in terms of lithium supply, there's been no new projects built and commissioned. Therefore, the market at the moment is very tight. There's a scramble for products from China in particular, which is dragging up commodity prices. The streets, so sell-side brokers and most analysts are lagging, so they're missing what's happening in the market. So we think there's a big opportunity in that space. Galaxy itself is merging with Orocobre at the moment. So from our perspective, that's an interesting merger. But separate to that, I think there's a high risk that Galaxy may get a counterbid, given the fact that the majority of their product is not contracted at the moment, which is attractive to an acquirer.
And you're able to short the sector but long the stock?
So we can short indices. So for instance, if we wanted to, we could short the S&P mining index. We could short energy indices, and that tends to be how we're managing risk at the moment.
And your highest conviction short, if you can tell us?
At the moment, it's actually also a lithium developer is our highest conviction short. And without mentioning names, it's a very significant market capitalisation versus the assets that it has. So in terms of the fund net exposure, we're about 40% long battery materials. That includes a long and short component. Our highest conviction short would also be in that space.
Thank you, James.
Thank you.